Welcome everybody. Welcome to oh, what was that? Who is that? I think that's you, Crypto Lion. Do you mind? There's a echo. Thank you. Welcome to the Cryptoverse DAO. It is Friday, so welcome to another Friday edition of the news. End of the week. Hope you guys have had a good one so far. Hope you enjoy your weekends that are upcoming. Do remember to like and comment and subscribe as well to this channel. Got to get all the YouTube stuff out of the way. If you want to join us live and get involved in, a really interesting kind of crypto community, if you want community through the bear market in prep for the bull run, we've got that. We've got a Discord. We do live discussions pretty much every day. We've got like technicals experts in there throwing charts around, fucking talking Bitcoin. It's just more fun to be a part of it live, you know? So the link tree is in the description. Feel free to hop on. With that said, let's get into it. Let's talk about this is something we covered in the previous episode, the Solana hack. And we have a little bit of an update on this. So experts have found private keys on Slope's servers, still puzzled over access. This is something that we went through kind of, I think it was after we did an open discussion segment and we were talking about Phantom and Slope and Trust. I think it was Trust Wallet. We went through Twitter and we saw an actual file that had people's private keys that had been accessed by somebody, and they were on Twitter going like, "Oh, look at this! This is a fucking joke." Absolutely not what you want to see in DeFi. This is silly. You shouldn't be storing people's private keys, period. But also on your servers, that's not very safe. Blockchain analysis firms involved in the Solana exploit investigation unpack the latest developments. People are trying to figure this out. Always love the art on Cointelegraph, man. That's great. So yeah, they're trying to figure out how hackers have gained access to about 8,000 private keys. People were waking up to notifications from their app saying, "Oh, so you've successfully sent your funds to a wallet," and people are like, "Wait, what? What do you on about?" Open up your app. And I mean, I don't think people own that. I mean, if you do own a lot of Solana, I mean, that sucks. But most people have. I saw this really funny video again on Twitter of this dude who's like, "Oh, this is how everybody's been acting. This is how everyone went through the Solana hack." Someone wakes up and he goes, "Oh shit!" And he goes to a Solana account and it's only like $12 in there, and he goes, "Oh, thank God. Okay, they didn't hack me." And I thought that was pretty funny, man. I thought that was pretty funny. But yeah, no, it's not super funny if someone has basically drained your account because the service that you trusted to store your funds, because of the convenience, and that's a very interesting conversation to talk about too. A conversation to have, I suppose, because these guys didn't do what they needed to do, or indeed just did something really stupid, and stored very sensitive information, right? Private keys, literally private keys. The one thing we tell people is if it's not your keys, it's not your crypto. You can trust one of these, what's the word, like an exchange or an app or whatever. You can trust them with your private keys, but apparently not, because storing that on a publicly, like in today's day and age, like pretty much everything is publicly accessible. If it's online, a hacker is going to be able to get into it most likely, right? So it's really unsafe what they've done. And yeah, they've kind of, we see the consequences now. Now we see exactly why you shouldn't do that type of shit. Around $5 million worth of Solana and SPL tokens were stolen on Wednesday. Solana has worked closely with Phantom and Slope Finance, the two Solana-based wallet providers that had user accounts affected by the exploits. It has since emerged that some of the private keys that were compromised were directly tied to Slope. Yeah, the conversation seemed to immediately be like, yeah, it's got to be Slope. I think one of our community members, I think it was Taylor, literally was like, you were probably like reading around the news and you were probably just like, okay, yeah, Slope, I'm seeing Slope. And he was like, okay, nah, it's Slope. So yeah, man, freaking not good. What do you think? Like, what do you think? Obviously, they shouldn't have done this. But if you have a different opinion, of course, do drop it in the comments, because we'd love to. This is what community is all about in DeFi, right? It's about having these conversations, figuring things out, and pushing forward the space, like deciding what the space looks like as you go. So if there is, a different opinion, obviously drop it in the comments and we'll uh, talk about it. So Otter Security and Slowmist, these are the two audit and security firms that assisted in the investigations. They have spoken directly to Cointelegraph. What they say is the working theory is that an attacker somehow exfiltrated these logs and were able to use this to compromise the users. This is still an ongoing investigation, and current evidence does not explain all of the compromised accounts. Okay. 5,300 private keys that were not a part of the exploit were also found in the Sentry instance. Okay. So Slope's Sentry logging servers. All right, that's what they're talking about with Sentry. A subset of affected wallet of the affected group of wallets had private keys present on Slope's Sentry logging servers in freaking plain text right there. So they just, shot it out of the, they took the logs out of the server and then just copied them over. So something to be said, this is not as a result of blockchain technology being weak or anything like that. Literally, it worked because they copied the keys in plain text. The system itself would have probably approved the transaction. This is purely down to from what information we have right now. This is purely down to an exchange. This is down to humans doing stupid shit, which humans in it. So, but yeah, the Slowmist team came to a similar conclusion after being invited to analyze the exploit by Slope. Team noticed that the Sentry service, the Slope wallet, collected the user's mnemonic phrases and private keys, and sent it to this server address. Once again, Slowmist could not find any evidence explaining how the credentials were stolen. Well, yeah, I mean, if it's online, probably, if you're on Discord right now, China's probably recording your... there's a YouTuber called Moon. Check him out. He's really good. There's a video called just something about Discord he made. He explains the whole thing really, really well. But yeah, Cointelegraph also reached out to Chainalysis, which confirmed that it was carrying out blockchain analysis on the incident. The blockchain analysis firm also noted that the exploit mainly affected users that had imported accounts to or from, sending their info, their seed phrases, their data to or from Slope Finance. So it does absolve Solana, which is good because Solana was, with that Solend, like the whale stuff, that was a little bit iffy. They essentially showed their hand. They said that if we need to, we can access your wallets, which isn't great for DeFi in any sense, but also like you shouldn't. I feel like it was just one guy who probably just jumped the gun there. They just shouldn't have said that publicly, but they did, which again, good thing. But yeah, this specifically, it doesn't do any further damage to Solana because Slope has done something louder and more stupid. But the situation has highlighted the need for auditing services of wallet providers. Slowmist recommended that wallets should be audited by multiple security companies before release, and called for open source development to increase security. Chen said that some wallet providers had flown under the radar when it came to security when compared to decentralized applications. He hopes to see the incident shift user sentiment towards the relationship between wallets and validation from external security partners. Until regulation makes sense in the space, not your keys, not your crypto. Down to it, there are a few basic tenets of risk management, especially risk management in DeFi, that if you follow, you will be fine, right? There's like maybe 5 key things. Don't fucking click links, right? Don't be greedy and click links because something seems like it's good. If someone's trying to give you some shit for free, they're not trying to give you some shit for free. They're trying to take some shit from you. All right, so don't click links. That's a key thing. Remember the not your keys, not your crypto golden rule. Invest in a hardware wallet. Invest in a Trezor or something like that. It's just a few key things, but people just don't do this, People like to be just goldfish around a space and talk about a space. But if you want to actually involve yourself in the space and actually see success with it, there's a few difficult things that you need to do. A Trezor might be expensive. You need to make that investment, right? Not clicking links means you have to learn to not follow your greed, which is a difficult thing for people to do. So it's like following these key tenets, you'll be fine. Most of the people that have been affected by all of this bullshit in crypto, people getting scammed, people getting this, that, and the other, it's all down to people not following. Obviously, the scammers are at fault, but also we live in the real world, right? Humans are atrocious, so they're going to do shit. What you need to do is protect yourself, safeguard yourself. And in DeFi, even though the regulation is kind of all over the place and it's a little bit, a little bit iffy, if you truly do your homework, then you can't go wrong, right? Because the information is out there. This is why the Cryptoverse DAO exists as well. But this isn't just a self-shill. Just fucking Google it, man. Go on like some kind of, just Google how to be secure in DeFi, and you'll find a ton of articles for free that will explain everything for you. Obviously, come to the Cryptoverse DAO first. The point of what I'm saying is I'm not saying this just to shill us. I'm saying this because it's a true fact, and it will absolutely elevate your experience in DeFi. Because the last thing we want is for some random person to come in and hear some dude talking about like, oh, I made $1 million here, I made $1 million there, and they get all excited and they want millions too, and then they go click some stupid link that someone sent them, right? That's not what we want. Do your homework. The information is out there, and if you follow a few key guidelines, you will absolutely be safe. There will still be idiots that put your private keys on servers and things like that so people can hack it. But again, if you had not used a service like this, then you probably would have been fine, like staying away from that not your keys, not your crypto thing. It means that the convenience is potentially not there. But remember what I said last night, guys. Literally, convenience it's a result of setting up the environment correctly. That's what convenience is. You've got to do things the hard way first, and you got to do it correctly. And then down the line, maybe you're lucky enough to, enjoy the convenience of crypto, right? Down the line. Obviously, this is a technology that's been evolving so quickly, so rapidly. So maybe we reach that convenient place sooner rather than later. But we absolutely should not assume that convenience is the way to go. It should be are things done the right way, not the most convenient way. And then, yeah, you'll be absolutely fine. This is the type of sentiment that honestly projects should adopt as well. But again, humans, market forces, blah, blah, blah. We live in a society. Fucking hell. All right, I'm going to stop this tangent now. And let's move on to Nomad. Nomad announces a $19 million bounty for lost funds from recent hacks. So Nomad's bridge. Let's take a look at this. Nomad bridge hack bounty. This is the actual tweet. We're looking at Nomad's announcing an up to 10% bounty to Nomad bridge hackers. Where Nomad will pay, Nomad will consider any party who returns at least 90% of the total funds they hacked to be a white hat. Nomad will not pursue legal actions against white hats. Funds must be returned to the official Nomad recovery wallet address listed here. Please be wary of impersonators and other scams. Nomad is continuing to work with its community, law enforcement, and blockchain analysis firms to ensure all funds are returned. Cool. As we alluded to earlier, they say we're actively working with the leading chain analysis and intelligence firm, TRM Labs, and law enforcement to trace fund flows and identify recipient wallets to coordinate the return of the funds. As the investigation continues, all involved are prepared to take necessary action. The timeliness of the fund return is important. If you're a white hat hacker or ethical security researcher who took the tokens with the intention of returning them, here's the process for returning them. Partnered with Anchorage Digital, nationally regulated custodian bank. Cool. All right. Well, I mean, what else can they really do? To be fair, 19 million bounty for 10%. 19 million would be 10% of the total 190 million. That was drained. In an official statement, Pranay Mohan, the co-founder and CEO of Nomad, commented, "The most important thing in crypto is community, and our number one goal is restoring bridged user funds. In that vein, Nomad will consider any hacker." Yeah, cool. We'll have to wait and see if anyone kind of takes the bait for this and says, like, I mean, that's kind of nice, actually. A nice little cop-out. Like, oh, you stole my money? Well, give it back. I'll pay you a little bit, and I'll call you a white hat. So, you did it to test my security system. That's fine. That's okay. But they have also said we are pursuing legal action. So if you don't do it in time, then yeah, we're gonna absolutely kind of pursue prosecution. In the days following the attack, Nomad denied any claims of ignoring system bugs that could have made room for such a compromise. Currently working. Yeah, we'll just have to follow the story and see. This is the actual article that we looked at yesterday, I think. But yeah, we'll just have to follow this story and see if anyone comes forward. Now, moving on from that, let's talk about Coinbase. America's largest crypto exchange is facing 2 more class action lawsuits over the losses suffered by investors in the company's stock. Were Coinbase also the guys who said we're not going to stop hiring and then stopped hiring? I think this was Coinbase. False and misleading statements. Well, that's not good. Let's take a look. 2 separate class action lawsuits they're in the throes of right now. Well, as of yesterday, I suppose. Both of them allege that the company made false and misleading statements regarding the nature of its operations. Each suit has claimed that investors suffered losses because of the bankruptcy clause in its SEC filing, and recent reports of an SEC probe into Coinbase over offering trading services for crypto assets that should have been registered as securities. The first suit was filed by Bragar, Eagle, and Squire in the U.S. District Court of New Jersey, with the law firm acting on behalf of all persons and entities who purchased Coinbase securities between April 14, 2021, and the 26th of July of this year. That's the first one. The second one came from San Diego-based Robbins, Geller, Rudman, and Dowd, LLP, which describes itself as one of the world's leading complex class action firms and covers the same class period. Okay, cool. Both of them they're basically the same wording, asserting that Coinbase knowingly knew or recklessly disregarded that the crypto assets it held should not only be registered as securities, but could also potentially be subject to bankruptcy proceedings. Coinbase disclosed that the crypto assets it held may be considered to be the property of a bankruptcy estate in its 10Q filing submitted on the 10th of May. The 2 class action suits also refer to the recent Bloomberg report that Coinbase was facing an SEC probe, an investigation, back in July 26th. This is the article. And the stock is down about 75%, well, almost 75% from the start of the year, surged by more than 47% over the past 5 days. That's quite good. But it could just be, who knows? I mean, with the markets, there's pullbacks. It could be, who knows? The most recent deal with Blackrock, that's something that we're going to visit in just a minute as well. We'll see the $20 trillion asset manager expand its institutional trading services to include crypto, which will take the price of the company's shares as high as $106.20 as of yesterday. Shares of Coinbase fell to $88.90 at the closing bell yesterday, down 2.70% in pre-market trade. Cool. So Coinbase has repeatedly denied it has listed securities on its trading platform. Paul Grewal, the chief legal officer, stated last month that the SEC has already reviewed its listing process. According to Grewal, this ensures that securities are kept off the platform. We'll just have to wait and see. This is a little bit shady. BlackRock's involved and the government is involved. Wonder what's going on. What do you think is going on with this? Drop a comment to let us know, and we'll talk about it in the live discussion, of course. But yeah, let's actually revisit visit in depth the BlackRock section of that. What they're trying to do is partner with Coinbase in order to make it easier for institutional investors to manage and trade Bitcoin. Taking the world's largest asset manager into crypto, yeah. So Coinbase surge, we've looked at that already. The partnership with BlackRock provides some relief for the US's biggest crypto trading platform. I don't know, man. I don't like this. Do you like this? Do you not like this? I don't like this. Top BlackRock clients will be able to use its Aladdin investment management system to oversee their exposure to Bitcoin alongside other portfolio assets, stocks and bonds, etc., to facilitate financing and trading on Coinbase's exchange. The focus of the partnership with Coinbase initially will be on Bitcoin, is what BlackRock has said. I don't see why. Like, for BlackRock, it makes sense to get into Bitcoin, but alts, yeah, it doesn't really make sense. So I don't think it's initially. I think it'll only be Bitcoin, but we'll see. BlackRock's move deepens the involvement of Wall Street's traditional finance players in crypto and related technologies, even after this year's meltdown. Bitcoin has lost about half of its value this year, while the collapse of the Terra ecosystem and all the contagion around 3AC have raised questions about the resilience of the market. I mean, we're still going. We're still going. We're going to go down further, in my opinion. Of course, again, if you have a different opinion, do let us know down below. But, like, nah, I think people have lost hope way too early. But that's fine. Coinbase is facing a probe by the U.S. SEC into whether the company let Americans trade digital assets that should have been registered as securities. We've taken a look at that as well. Regulatory risks, let's talk about that from the partnership. They're manageable because it's starting with Bitcoin, which, yeah, it does have clearer regulatory status than other digital assets. This is according to Oppenheimer & Co. analyst Owen Lau. The partnership is a validation of the future of blockchain and a validation of Coinbase's reputation. I think that's kind of maybe what Coinbase really stands to gain. I mean, they stand to gain a lot when, like, in the position that they're in right now. But, yeah, no, it makes sense. It makes sense. It's a big plus for the industry and also for Coinbase. Yeah, I mean, it is a plus for... what's the word, for this technology surviving, continuing. I don't know if it's a step in the right direction in terms of what mass adoption should look like, but it filters down, doesn't it? We've talked about this a bunch of times. Every time there's an emergent new technology, if there was the power to shoot lightning out of your fingertips, who do you think would be the first person to be able to use that technology? It'd be Elon Musk, and then it'd be whoever owns, well, maybe not Elon first, but it would literally be like the elites, the shadowy elites that people talk about. It would be the people who are positioned best to have the biggest access to, the widest access to all the goods and services that humans produce, which is the richest people, because money is the goods and services exchange, like, arbitrage medium, right? So it's just logically, it just fucking makes sense that first, it's going to be Blackrocks and Washingtons and governments and blah, blah, blah. They're all going to get rich off of Bitcoin, and then it's slowly going to filter through. Now, the power of blockchain, in conjunction with the positive sentiment around going bankless, and going, like, anonymous, like leaving the system type thing in favor of DeFi. I think the fact that those two things are happening in conjunction with each other right now may mean that this technology doesn't actually go through that filtration process, but actually maybe the rich and the elites, again, oversimplification, but if these guys fuck it up, right, and the masses do it correctly, that's a possible outcome too. That's something that could happen. But again, we'll have to wait and see, but also not really wait and see. What we can do is get involved, find a community, and start building that community. Join the Cryptoverse DAO as a starting point, but if you want to start your own thing, man, like, you're in a literal bear market. If you're watching this YouTube video and you're thinking, hey, listen, I've got something of a brain on my fucking shoulders, right? Something. It kind of works occasionally. I have a computer, I can type words, and I can kind of understand the concepts of things. Learn about Bitcoin, join the Cryptoverse DAO, get educated fully, and then go out into the world and create something, because I promise you, like, there is something within you that is absolutely unique and different to every single other person. Not you and me are not having the same experience. We're on the same planet, but we're absolutely not having the same experience. So what you are specifically living, right, might be something that translates into an idea that changes the world. And the only steps you need to take are to educate yourself and empower yourself so that the brain waves, instead of just floating off into the ether, can actually be channeled into something that is a industry of exponential growth, an industry of kind of just unchecked scalability, man, honestly. So yeah, just something to think about, something to absolutely think about. I think the crypto industry really does need a seismic kind of, what's the word? A seismic shift in rhetoric. This is something that really needs to happen. We need to have a shift in the rhetoric of what it means to be in DeFi. And what that looks like. Fuck it, do it as a DAO, man. Treat it as like a DAO type of mindset. Let the masses decide. And when I say masses, I mean individuals too, man, because individual actions are what build those huge waves, man. Like a shoal of fish moves as a singular unit because each individual is taking action, right? That's kind of what happens. But yeah, we'll have to see what happens with Blackrock. Let's continue bloody hell. I was about to say let's continue blaking down the article, but instead of that, let's break down the article. Our institutional clients, says Joseph Chalam, the global head of strategic ecosystem partnerships with BlackRock, they are increasingly interested in gaining exposure to digital asset markets, and they're focused on how to efficiently manage the operational life cycle of these assets. Okay. If anything, I mean, it might mean that Bitcoin sees huger surges, right? It could be bigger drops too, but huger surges, which, would be something. Institutional investors accounted for about 3/4 of the $309 billion in trading volume on Coinbase for the first quarter. Coinbase clients include hedge funds, corporate treasuries, and asset managers. Exciting milestone, says Coinbase Institutional's head, Brett Tejpal. Interesting, very interesting partnership, very interesting story. Next step in a wider strategy to expand into digital assets. Yep, makes sense. Yeah, I think that's about the meat of the story right there. If you do have any insights, of course, do let us know. Moving on from that, let's continue talking about Ethereum. I need to get an ad blocker on Firefox, man. Normally I use Brave, but today I'm using Firefox. Ethereum's merge will have several consequences for the blockchain. Let's talk about that. So September 19th, we're moving to proof of stake. What is going to happen? What does that mean? We are looking at a potential roadmap to a more scalable future through sharding. Okay, interesting. So lower energy intensity, transition to a deflationary asset. I'm wondering if we should talk about sharding, or if we should maybe we can create a educational episode on what sharding is. I'm sure the content is probably in the DAO. But yeah, with that said, it reminds me to remind you to check out the educational playlist on YouTube as well. Because little things like this, if there's a question like this, most likely we've covered it. So, go through the playlist, watch all of that stuff. You might learn something. Or, come into the Discord and you can just view it in your own time. Check out the Medium. It's across the internet in it. So, yeah, I think we'll leave the sharding thing specifically. And we'll just break down this article. So, the merge, first of 5 planned upgrades for the Ethereum network, may increase transaction speeds by only 10% by reducing block times. Says a report. What report? I don't know. Let's continue. The upgrade, however, lays the path for the surge. They're talking about this thing Vitalik was talking about. The surge, the verge, the purge, and the splurge. And there was a really, really nice infographic that he released. If you're not following Vitalik on Twitter, why are you not following him on Twitter? Go follow him, and just go through his tweets and you'll find it. It's really interesting. Lays it all out. Initially, I thought it was just like he was organizing it in the sense of this comes after this, but it's not. It's all simultaneous.